Bonskew. I'm going to make you the presenter. So looking forward to this interview. I have for quite some time. So you're going to have the mic and be able to share your screen. And what a great day to have you with a dollar collapse and a continued melt up in equities and collapse in the yen. And I know you trade Forex because I've been to your blog or your website. So looking forward to hearing your voice.
Thanks for having me on, Dale. Appreciate the invite.
Oh, Skew, great to have you. And, you know, you can share your screen. There's a little option there if you want to show your setup and things you're looking at. Great. So why don't we start with your handle? Why Bonskew?
Well, it's not really that interesting. It's just something that I happened to pick up that I thought looked all right. It was short. I trade options too, so and I like interest rates a lot, so I just mixed the two.
Okay, and why don't we go back to how you got involved in the trading business, how long ago it was, and a little bit about what it was like for you at the beginning, and if you the ups and downs. God bless the broken road that led you to where you are now. What was it like for you? Did you have any mentors, or are you pretty much a self-taught guy?
Yeah, for the most part, I'm self-taught. So how I kind of fell into this is kind of a long road, so to speak. It kind of goes all the way back to when I graduated high school, because I would have never ended up in the military. I probably never would have ended up trading in the markets, because it was the main reason I ended up picking up an Economist magazine, because I happened to be in Iraq at the time, and we was in this little pop-up shop that they had for us, because it was the beginning still. So there wasn't like an infrastructure built out like there is now. And I happened to, I was curious. I was like 18. I'm like, what the hell are we doing here? Yada, yada.
Right.
And I picked up an Economist magazine because it had like a barrel of oil out there, and I already knew Iraq was some type of oil producer or something. I didn't really know anything at that age like I do now.
Right.
So that was kind of what put me on the path.
That's interesting. So you found out why you were there by picking up the Economist magazine, because
that's when I started connecting the dots for sure.
Okay. Because before we went in, Saddam was threatening to only want to get paid in euros. So part of it was hegemony. And before we go on, I salute your bravery for being over there. Maybe it was naivety at 18, but
for sure.
Wow. It definitely. When I was 18, I was in a dormitory in college, hoping I'd get a high lottery number so I wouldn't have to go to Nam. So I always appreciate the courage of people that were willing to do something like that. So that tells me that you need courage to trade too, don't you, Bonskew?
Right, for sure. And I think this is probably trading is a little more difficult than just following orders, right?
Mm-hmm.
Being in a combat environment is maybe similar, but the ramifications are slightly different. So it's hectic, but not as hectic.
Okay, so what are we looking at? GEZ 2017 to 18.
Oh, yes. You know what? I was actually going to update this. This is just a spread. I like to look at euro dollar spreads on occasion. And I usually look at them a year apart. Not for any reason in particular. It's just what makes sense to me.
For people that don't know, it's not the euro currency. Yeah, they're like what, 90-day deposits in Europe, some type of instrument that was created. Go ahead.
In plain English, they're basically futures for CDs.
Okay.
That you would get at a bank, 90-day CD, because they're the maturity 90 days. So that's basically what it is. Not what it's called, because you can keep them overseas, and just because of that, they let them be called euro dollars. But it's just wholesale loans.
Okay, so is this the spread, or is this the rate right here at 0.2675?
Yeah, this is a 26 basis points right now. Basically, 27.5 is what it's saying.
Okay.
So it's just the 2018 December contract versus a 2019 December euro dollar contract. So you're
Okay.
just going to take the difference of the two. And
Okay.
this is a normal curve for now. So that means that as you're looking at it in a yield curve chart,
The
the
further
rate
out you
should,
go, the higher the rate is.
correct, it should be a normal curve to some degree.
Okay. And have you ever seen backwardation where, you know, possibly in your career where you've seen squeezes on liquidity where the front month is stronger than the back? I don't know.
Within months. I mean, you gotta think back to 2008, right? That was just, you can't even really throw that in a data set and think it makes any sense. Uh, because you know, that's something that unless you're just positioned the right way beforehand, you're not prepared for, right?
Okay.
So,
Right.
you know, I wouldn't want to be the guy caught trading spreads in something like that, personally.
Okay. I remember an old spread that used to be a flight to quality spread called the TED spread between T-bills and,
Right. Yeah.
you know,
By the time I got involved, that was no longer a thing.
right.
By the time I got involved into the business, that was
So
no longer a thing.
just on the pure rate, haven't short-term rates gone from like 0.5 to 1.5? So I know
Yep.
this is a spread. So haven't rates tripled as well on the euro dollar in the last
Pretty
three?
much, yeah. Yeah.
They tripled, huh?
Yeah. I mean, it's been pretty crazy. Here we have a 2018 June contract.
Okay.
And if you want to look at it from a rate point of view, we can just take this and subtract it by one, and
So I get
hopefully I
this
did that
question
right.
a lot, and
So
you know,
this
a
is
lot
the
of,
rate point of view because I just inverted the chart.
oh, okay. All right. So yeah, they have, it's been a dramatic move to the upside. Why is it not supporting the dollar? A lot of people thought that
Uh,
when we had this bear move in treasuries and even short-term instruments, it would be
right. Yeah.
supportive for the dollar. What's your view on
Yeah.
the smash that we're getting in the buck and the rally we're getting in everything?
Right. So I think what people miscalculated is uh, the fact that that matters. People like to think it doesn't matter, but it does. Um, if it didn't, you know, we wouldn't have capital markets because everything would just be free. So, you know,
Right.
people like to think that doesn't matter. So what we're currently seeing right now is the world saying, yeah, we don't really want your dollars. And the funny thing about it is that people miscategorize what these politicians say. I don't know where people get this strong dollar policy idea from, but since at least the Clinton administration, I mean, I was a kid at that point in time, and I can still remember this, and I didn't know a damn thing about markets. There was no such thing as a strong dollar policy. Like, there just wasn't. The dollar went up until basically 2000, and it hasn't gone up since. It's, you know, that was like the peak,
Okay.
and that
That
was
was
like the tail end of the Clinton era.
5 or something like that on the
Right,
dictionary. Yeah.
right. That was the tail end. Let me find it. I know I got it in here somewhere. I'll look at it on occasion. Maybe I don't. I'll pop it up on here real quick. But yeah, it's just, you know, you gotta you gotta just look at the bigger picture. You know, you can't really get caught up in ideological notions when it comes to these markets because they don't care about your opinion. And full disclosure, I don't trade based on my fundamental point of view. I've gone through a major process and having to let that go because that doesn't pay the bills. Period.
Right. So
It really does not.
price is always more right than our opinions.
Precisely.
Okay.
Always. Every day.
So let me ask you, what instruments do you mainly trade, Skew?
Mainly trade futures, contracts, and FX spot.
Okay.
And
Because
I'll trade
I
options on
remember
futures.
when I went to your site, you were talking euro pound.
Right. I do trade currencies a lot.
Okay.
Uh, I mean, I have to. I feel like if I don't know what's going on there, I don't know what's going on. That's just the way I look at the market primarily. My favorite pairs to look at are the Swiss franc yen. I mean, these are just weird pairs that nobody. I like to look at yen crosses primarily.
Okay.
Euro yen is a personal favorite. Just because Aussie yen too, it's very telling. Anything, these currencies, they tell you a story. I'm not the type of person that looks at just the equity market. I know most people start out like that. I didn't even start out like that. I started out looking at the currency markets because my experience with finance has been more, before I got involved, was more tied to currencies than with anything else. I didn't really know anybody trading stocks or anything like that growing up. I grew up in the Bronx, so you don't really see anything like that. The most I knew about was my mom did work at a bank, which no longer exists on this side of the world anymore. They're strictly in Japan now after 9/11. She worked at a bank, and prior to that situation, she did work at Wall Street on the floor with as an accountant. So she was basically a fund accountant for a big bank. For their floor traders on the street, in the actual Wall Street Tower where the floor was.
Okay.
So
Cool.
that was the only.
Did you ever go visit your mom on the floor?
Yeah, not on the floor, no.
Okay.
But I did go visit her at the World Trade Center, which was, you don't forget that entrance. I mean, if you've ever been there, that building was crazy. It was like the whole entrance was just marble, the whole lobby. It was crazy. It was like 2 stories of straight marble. It was phenomenal. But I won't.
Let me ask you this: when it went down, was that your inspiration for joining the service?
Negative. I'm not even going to sit here and bullshit on that one. That's a negative.
Okay.
Yeah.
Okay.
No, it wasn't.
All right.
It was not. A lot of people like to ride that.
A lot of guys did.
Yeah, a lot did, but a lot of people like to ride that too and use it. So I don't.
Right.
You gotta just really be careful with that kind of stuff because
Okay.
it's too personal of a thing to ask some people. And some people just lie about it,
Right.
flat out, which is crazy. I don't understand the purpose of that.
A lot of people want to embellish their lives. So, do you mainly scalp, skew, or do you have any type of, do you swing trade? What's the time frame for opportunities for you that you mainly look for?
Right. So in FX, it's mainly weekly. So I like to ride the wave in FX, so to speak. I don't like to make my life too difficult. I've went from a guy I'm kind of a counter trend trader, primarily because I like to look at things from the top down, and not just economies, but also markets. So I'll start at a monthly time frame like I am now. And if I feel I need a bigger point of view, I will go out to quarterly or even out to 1 year. I do not care. I will try to get the proper point of view. I try to give the market structure. So I'll go from a 1 month to a 1 week just to see if I see anything that I didn't see in between the monthly and the weekly. I'm just basically comparing I'm just trying to reconcile time frames. Do they make sense?
Okay.
And that's like the
right hand corner, is that a market profile with the green and the red?
Yes, it is.
Right. Okay.
Yes, it is.
So, what are you seeing in Aussie Kiwi here?
Well, right now it looks like it's just gonna bounce in this range to me.
Okay.
Doesn't really look like
support right here, isn't it?
Correct. Right. I do abide by the moving average rules that we all like to live by, if we use them. 200 moving average daily or any time frame is a major figure. So it is important to watch. If I was going to do anything in this pair, I would definitely be looking to buy, simply because I see a divergence, and the divergence that I see is right here.
Oh, right here. Okay. And that's use an RSI with a moving average?
Correct.
What's the time frame on your moving average?
I do use a 13 moving average on the RSI.
And the standard 14-day RSI?
Actually, no, I use a 10-day.
Okay. RSI. How'd you come up with 10? I'm always curious how people come up with, the amount of days they want to use in RSI. Why 10?
I'm the kind of person that doesn't like to wait too long for a move. I'm not
Okay.
afraid to take the risk when
Okay.
I'm gonna take a trade because I already enter with a plan beforehand. I've, like everybody else, I've blown up accounts. Everybody has to blow up an account or two. That's a given. Some people have to blow out 5 or 10 before they get it. That's just the way it is.
Yep.
But as long as you keep going, that's all that
Been there.
matters. Yeah,
Been there.
exactly.
Yeah.
Exactly. That's all that matters is just keep going. You just can't stop. So the thing for me was just finding that point where I can identify a reversal to some degree. To me, that's extremely important because I'm the kind of person that feels that can accomplish whatever he sets his mind to. I'm not the type of person that agrees with the notion that you can't time a market. I think that's bullshit. People do it all the time. I can't see why I can't do it too. And I do it. I might not be the best, but I cover my risk so I don't have to be. And that's the key.
Let me ask you this. One of my shortcomings is a tendency to be early.
I had that problem for years.
Is that yours too?
Yes, sir. I had that problem for years, and I've mitigated
Okay.
it by mastering the way I look at the RSI versus the market. That's been the biggest difference for me.
Okay. So you overcame it by shortening time frames, or do you put a toe in the water when you're building a position,
Correct.
or are you all in when you go?
I'm more of a quasi toe in the water kind of guy. I kind of like to use units for as an example. So say here, I would be looking to take a position once this Aussie Kiwi closes above the 5, that yellow line there, that 5-day RSI,
Okay.
right? That's something I would normally do.
Okay.
Because I want the market to close. I want it to give me confirmation that what I'm visualizing right now isn't just for right now. I want to make sure that I have some type of edge going into this trade.
Okay.
So I
So
want to.
so it goes to, you never know what kind of candle it is till it closes.
Exactly.
Never anticipate a candle close, because who
Never
knows,
ever. I've made
right?
that mistake too many times.
Yeah, I've done that. Sounds like we're kindred spirits here.
Yeah.
So you say that you like to take contrarian stances in the market. Did I hear you correctly?
Yeah, you did.
Okay. So
I'm like that by nature.
so let's get contrarian a little bit here, and maybe go to your long-term chart of the pairs you like to trade, Aussie yen, Euro yen, or even Euro USD. That's fine.
Yeah, let's talk about this one since everybody's
Okay,
so
great.
in the uproar.
Yeah, because if you go further back, really, there you go. So
Yeah,
we're into.
this is what I want to talk about.
Okay, beautiful.
I mean, we got multiple points of view here that just
Okay,
look like they're ready to keep on going.
right.
I understand it's up there in price. Sure, I understand it should be at 0. Sure, I blew out one of my first major accounts on a short Euro US dollar trade.
Okay.
Straight up. Like 40,000 gone in like a month.
Okay.
Just trying to be short the euro. Just because I knew it was worth 0. All right?
Okay.
We always know until we don't know anything because we're
You're
broke.
a veteran. You're a veteran who's been in combat in more than one way.
That's right.
For sure. So okay, so I see like you have some bands up here. Are they bullies?
They are bullies, but there is a twist. I use a 26-day moving average and I use a 3 sigma band. I do not use a 2 sigma band. So I'm a little different than most in that aspect.
Okay.
And the main reason I like to use a 3 sigma band is because 2 sigma is so basic. It's so basic. It's like everybody looks at that. There's no edge in looking at that for the most part. Unless the market's going sideways, it's not really of value, in my opinion. And the reason I think that really ties the math. If Bollinger Bands are going sideways, that means that there is no volatility. I mean, that's just what it is, right? And because while there might still be a measure of volatility, the market isn't moving. It's just going up and down in between certain set of numbers. So that only gives you certain advantages. And for a person such as myself in the FX market, specifically the spot market, I'm not talking about the futures because I trade futures in a completely different manner.
Okay.
For the spot market itself, I like markets that trend, right? I want to see this move in the euro from 2003 to 2008 just go, right? I know to always be long when I need to be long, and I want to be able to see a pullback when there's a pullback happening. Because while this is a monthly picture, we can take this monthly picture and break it down, into a weekly picture.
So are you looking for a reason to be getting short euro now that we're approaching
Negative.
some fib retracements of the whole decline from, say?
I do not use Fibonacci's. I am a math person by default.
Okay.
Even before I became a math person by trait, that's what I went to school for. So don't get me wrong. I believe in Fibonacci. I know Fibonacci numbers are real to a certain extent, but when it comes to the market, I just can't go off of those lines. It's too much for me, for my eyes personally. So I just leave them be. I just follow price. And on a monthly, it's telling me I need to stay long. On a weekly, I'm also seeing the same point of view because we're just now hitting these Bollinger Bands, right? We really only hit it once yesterday, right? Yesterday's session really hit it for the first time. Today we're getting close to it. We haven't really hit it because it's 24.22 right now. That's what the Bollinger Band is giving us, and we've only reached the high of 23.82 on the spot, 0.9. So there's still room to run by approximately 40 pips, which is not small potatoes, as we know. So that can make or break plenty of people. And we're talking on a weekly time frame here. So it's not really that much, but every little bit counts if you want to keep this market going. And, just because price is hitting a Bollinger Band, especially something as wide as the 3 Sigma, doesn't mean it's going to stop there. As you can see at the previous time it hit it back in May 8th, it just had a nice little pause day, had a nice kind of like wig out day the day after on the 29th, or the week after, the week of the 29th. And then it just kind of chopped sideways till I ran into this parabolic SAR here, stop and reverse. And it just kept going up. And it's going to keep going up again. That's just, we're going to at least see 125 for sure.
Yeah, I think so. I remember seeing John Bollinger talk about that when the bands pinch and compress.
They're going to expand.
They take out the higher or the lower band, that the first move, the takeout is a fake out.
Right.
And then he waits for it to get back into the band to fade it. So have you seen that type of action using your bands?
Yes, I have. I think anybody that uses Bollinger Bands has. It's damn near impossible. It happens anytime there's a big breakout. You see the same price action preceding that. Right here, we have the same situation. Right here in the year 2014, before the euro dumped.
Right.
With the second leg lower.
Yeah.
Same action.
Okay.
If we go back even further, we have a nice little squeeze right here. Right, another little squeeze right here, and we have a nice little pop there. Not something significant, but there's something there. It's just the way it works. It's just the way it works. Volatility like price is ever changing, so it's hard to forecast, but it's also important to be mindful of the fact that nothing stays the same. So while I might be thinking, for example, I thought bonds were going to make a big move a month ago, right? I'm dead wrong. They went the completely opposite way. And until my risk point wasn't breached, I didn't change my opinion on being long bonds. And once they got breached, then the market structure changed for me. So I had to reassess my view. And that's what I did. And now I'm the biggest bear out there. And the funny thing is that I can completely attribute a fundamental point of view to both sides. So this is the reason we can't use that nonsense. And I started out on the street as a hedge fund analyst, as an equity analyst of all things, and a value shop. So I've done a complete 180 in the way I look at things in the market. You have to evolve. If something isn't working, you got to change it. That's
Yeah, if we're not
no doubt
growing,
about it.
we're dying, buddy. So, yeah, I noticed that, you do have a website. Uh, it doesn't look like you have a business model. What's the purpose of your website? You're just trying to pay it forward to people and just share your ideas with the public?
Yeah, for the most part. I mean, the loudest thing I've ever done on there that I think is probably the most important thing is the big dollar piece I wrote at the beginning of last year. I was very, very vocal on that. I still stand to that point of view. I mean, they just have no choice but to either destroy the dollar or destroy the dollar. I mean, they just know they have no choice. The government is broke at literally every level you can conceive of, uh, from the lowest municipal level to the federal level. So,
So
if we want to get into the fundamentals, we can, but I don't trade off of that.
Okay, so we have to debase to survive all the debt that we have, and
Yeah, I mean, it's 20 trillion that we can count on.
yeah,
There's tens of trillions that we can't see. That's a fact. This is not an opinion because, as we saw in the 2008 crisis, these banks can hide anything off the books. It just doesn't matter. It doesn't. So
okay.
any number that you hear being exposed, you can multiply that bad boy by at least 2 to 3. That's a guarantee. I'm going with 50 trillion. So
Okay.
I'm guessing that there's probably 50 to 70 trillion out there just sitting around. I mean, no NPLs have been cleared. All the old debt is still sitting on the books. I mean, it's ridiculous. It's ridiculous. It's ridiculous.
So are you gonna stay in the U.S. and ride this out? Do you think eventually we have some type of major economic crisis?
Yeah, I mean, this country isn't, people are too sensitive. Everything bothers everybody. The environment is too hot. I mean, it's for real. Everybody's getting squeezed in every direction. They're getting squeezed in their pockets. They're getting squeezed in their living space. They're getting squeezed in what they can say. They're getting squeezed in the way to think. I mean, it's a squeeze all over. Well, that's just creating a boiling pot. That's not, all this progressive nonsense. It's not to get political, but it's just gonna not lead to anything positive. It's just it's not going to, because they're not about sharing ideas. They're about imposing their own ideas. And that's the problem. People have to just shut up, mind the freaking business, and let everybody live the life they want to live. It's not anybody's business to impose anything on anybody else. Period. That's my point of view on life. I don't walk around bugging people, telling them what to think. I just point out the facts. My Twitter feed is nothing but facts. You don't gotta like it. You just gotta live with it. That's all.
Well, I tell you what,
Go ahead.
I respect your strength and your confidence. You're now my trading warrior brother, and I would trade in the foxhole next to you any day, Q. So
much appreciated, Dale.
Really a pleasure meeting you, and keep up the great work of hitting people in the face with a dose of reality, and keep in touch with me. Perhaps we could do it again, and let me know down the road if your attitude about the dollar or anything changes, and perhaps we can do this again, do a rerun, a repeat.
Sounds good, Dale.
Later this spring, early summer.
Sounds good.
All right, my friend. So everyone think @Bonsq, that's where you could follow him. If you want to show your website, you could do it now too, buddy.
No, it's all good. People can hit it up on the Twitter profile. It's on there.
Okay, buddy. So thank you very much for your time today. Good hunting. I hope 2018 is a great year, and not just in trading, but in every way for you.
Same to you all. Thank you very much for having me on again. Appreciate it, guys.
Okay. Pleasure meeting you. Okay, everybody. We'll see you tomorrow. That's it for today. Good hunting. Remember, don't just count your pips, count your blessings. And the dollar is down. If you see commercials for McDonald's about a weak dollar, cover your shorts. I'll talk to you later. See everyone tomorrow. Thanks again, Stu.
No problem. Have a good one, guys.
Don't just count your pips, count your blessings. See everyone tomorrow.